Yeah, silver's going to 50, 70, 100, soon. And that's a big deal. And yes, I agree with you. I think psychologically, I mean, up until now, what people have been kind of saying is, well, the gold market's a bubble, and a lot of the analysts in Toronto who are following these mining stocks, oh, yeah, it broke through 2070 to 2300, but it's coming back down to 2000. They had all their models built on 2000. Well, yeah, it made it to 2800, but it's still coming back down to 25. Well, yeah, it made it to 3200, but it's coming back down to 3. Well, yeah, it made it 34. Pretty soon they're going to say, holy shit, there's something bigger going on here. This is not coming back down.
Mhm.
We're not going from 3,400 to 3,000. We're going from 3,400 to 4 to 5 to 6 to 7, Now, which is not to say there won't be corrections along the way.
The silver market is showing signs of resilience despite a modest pullback in early Friday trading. Support remains firm, with the $37.50 level having acted as both a floor and a ceiling in recent months. Should prices dip toward this level again, traders may attempt another push lower, only to see silver rebound toward $39. A decisive break above $39 would open the way to challenge $40, and clearing that level could ignite a far larger upside move. In this evolving backdrop, Lawrence Lepard, a veteran investment manager and outspoken advocate for sound money, sees silver confirming gold's breakout, calling it a significant development and positioning himself extremely bullish. He points to recent discussions, including Thomas's interview with Gary Savage, as reinforcing his conviction that silver's advance marks a powerful shift in market sentiment. For years, gold's rise has been met with skepticism, with analysts repeatedly predicting pullbacks after each new high. But Lepard believes the narrative is changing. The steady climb from $2,000 to $3,000 took nearly 2 years, yet the next leg to $4,000 could unfold in half that time. Major Wall Street firms, including Goldman Sachs and JP Morgan, now forecast that milestone could arrive by mid-2026, just 15 months after gold crossed $3,000 in March. This accelerating timeline, coupled with silver's technical breakout, suggests the precious metals bull market is not only intact but gaining momentum. In this video, we examine Lawrence Lepard's outlook, not only on gold and silver, but also on the broader forces driving them higher. He sees a structural re-rating of both metals as investors reassess their role in a fragile monetary system. And with silver now tracking gold's lead, he believes the setup for outsized gains is firmly in place. Stay tuned for a deep dive into the signals, the sentiment shifts, and the market patterns that could define the next major move in precious metals.
The fact that silver is now starting to confirm the move in gold, I mean, gold moved first and silver's following through. That's huge. I mean, I am so bulled up on silver right now, Thomas. I told you I listened to your interview earlier, with Gary Savage, and I mean, yeah, silver's going to 50, 70, 100, soon, and that's a big deal. And yes, I agree with you. I think psychologically, I mean, up until now, what people have been kind of saying is, well, the gold market's a bubble, and a lot of the analysts in Toronto who are following these mining stocks, oh, yeah, it broke through 2070 to 2300, but it's coming back down to 2000. They had all their models built on 2000. Well, yeah, it made it to 2800, but it's still coming back down to 25. Well, yeah, it made it to 3200, but it's coming back down to 3. Well, yeah, it made it 34. Pretty soon they're going to say, holy shit, there's something bigger going on here. This is not coming back down.
Mhm.
We're not going from 3,400 to 3,000. We're going from 3,400 to 4 to 5 to 6 to 7, Now, which is not to say there won't be corrections along the way. I mean, could we go from 3,400 to 3,000? Absolutely. We could go back to 2,800, but I don't think we'll go below that. But in a seesaw fashion, I mean, gold, all bull markets try and shake off as many riders as possible. So most people should be aware about the time they feel like they got to own it. Well, then there's going to be a correction. But, if you take a long view on this, I think we're going much higher in both of these. I think that's right. I mean, I think, I hesitate to say it's different this time, but I think there are fundamental underlying drivers here that you need to understand to recognize that this is going to go further than people think. And it's been a long time coming. And by the way, some of these charts are just absolute things of beauty. I mean, you look at the silver chart.
Mhm.
It's just a long, rounded bottom with a cup and a handle, and now a breakout. And I mean, $100 is like falling off a log. I mean, it could go to much higher than that. So, and by the way, I mean, most of the companies I own that mine silver, I mean, the cost to mine was $20, $25 an ounce. $32, they were kind of getting by. At $100, they're going to be making some profit. I mean, to tell you, right? I mean, it's going to be, their costs will go up, by the way, because there's inflation on all their inputs. But they're not gonna have inflation of 500%. They're gonna have or of 100%. They're gonna have modest inflation, and the price of the metal they're selling is gonna go up 2x or 3x. So there was a bull market from 2001 to 11, and then there was the bear market, and then there's the bull market that started kind of in 2016, and we're in it still. And what you can see back in the one from 2001 to 2011 is that gold went up, but the stocks went up even more. And that's because they represent streams of gold, and gold just sits in a vault and doesn't reproduce. What you can see from the bottom in 16 to the present is that gold has gone up quite a bit, and the stocks, the response of the stocks has been quite muted. They've underperformed gold in terms of appreciation, and so there's a big kind of alligator jaw difference between the price of gold, which is at 3,400, and the Huey, which is at 400ish. And so my expectation is that as people come to realize that prices are going to go much higher in the gold market, these stocks are going to catch up. And the stocks are still looking in the rearview mirror thinking, oh, this gold price isn't going to last. But once they realize it's not only going to last, but it's going to go to 5,000, there's going to be just a very aggressive and massive move in these stocks. And so I am really, really bulled up. My fund is probably up to 70% so year to date. But honestly, from where it is right now, I sincerely believe it could double in the next 12 to 18 months. I think it will. And that's just because of the catch up. These gold and silver stocks have really lagged, the underlying movement in the price of the metal. And I'll tell you one of the reasons for that, I mentioned this before, is that this used to be the only way to play alpha on monetary debasement was gold stocks. Gold would go up and the stocks would go up more. So everyone wanted to make more than just the price of gold going up. They buy gold stocks. Well, that's not really the case anymore because Bitcoin exists. So if you look at gold stock investors, they're generally over 40 or 50 years old. And so all the young people, they're not buying gold stocks. They're like, screw that shit. I'll just buy Bitcoin. I understand that argument, but it means that there's less interest in these things than there used to be. But all the same, I mean, the big pools of money, I mean, right now, the entire gold stock market is about $500 billion, in the context of a stock market of closer to $50 billion or $50 trillion of value. So, it's like 1% of the total value of all the stocks outstanding. And so, what's going to happen here? I mean, these people, these algorithmic traders, these algorithmic managers and others, they're going to look at like my report and they're going to say, hang on a second, you mean to tell me the S&P went up 6% and gold stocks went up 50% in the first half of the year? Shit, why don't I have any of those? I mean, and that doesn't mean they're going to sell all the S&P and go buy gold stocks, but it means they're going to go from a 0% allocation of gold stocks to a 4% allocation. And, that 4% is not a small amount of money given how small the market for gold stocks is, if you see what I'm saying.
While the idea of a gold reset has been discussed for years, Lawrence Lepard argues that for it to meaningfully strengthen the U.S. Treasury, it would require a dramatic revaluation to somewhere between $10,000 and $20,000 per ounce. A politically risky step he believes would only come after a bout of extreme inflation, when public pressure to fix the monetary system becomes unavoidable. In his view, such a move is unlikely in the near term but remains a plausible outcome under the right economic stress. Lepard's longer-term scenarios for gold from 2030 to 2050 range from the metal reaching $10,000 per ounce, to sharing global reserve currency status with Bitcoin, to even the extreme possibility of global gold supplies being exhausted by mid-century due to relentless demand growth. He points to China and Asia as the strongest sources of physical buying, supported by deep cultural affinity for gold, while in the U.S., ETF flows have been subdued but are showing signs of revival, from Costco's gold bars selling out to more retail inquiries. On the market side, July saw gold prices hold steady, with the Shanghai Gold Exchange posting a mild seasonal rebound in withdrawals that still lagged long-term averages, and Shanghai Futures Exchange activity cooling but staying high compared to prior years. Looking ahead, Lepard expects seasonal improvement in China's wholesale gold demand, particularly for jewelry, though affordability constraints may keep volumes under pressure. Let's get back to the interview.
The whole issue of gold revaluation is a fascinating one. I mean, Miran wrote a paper about this. Trump has said things like he who has the gold makes the rules. Besant has said things like, we need a new Bretton Woods agreement, which is the last one, and I want to be at the table when it occurs. Besant has said things like we have assets that we could sell and revalue, which, I view as being the gold, even though he denies it. I'm sure it is. It appears to me that gold revaluation is kind of on the table and part of the discussion. I think the administration understands that we need a neutral reserve currency and that the system we've got has hollowed out our manufacturing base. And where that's become particularly acute is in these wars and how quickly we're burning through munitions and we can't replace them. And now, of course, we've all read the stories about how we need all these rare earths that only China produces. And so we're going to put tariffs on China, and China's like, yeah, that's fine. We're not going to sell you any rare earths. Ford's like, hang on a second, I need those to build my trucks. And China's like, well, all right, we'll let you have them for the trucks, but we're not selling the rare earths that you guys are using in weapons. And so, the Pentagon, the CIA, the administration, I think really understands the dilemma we've gotten ourselves into, and that we've got to return to a neutral reserve currency. And I'm sure they've had conversations about a reset of gold and maybe about a reset surrounding Bitcoin. But whether or not they've got the courage or they feel like there's the political space in which to do it. I mean, sadly, I think it's probably pretty thin. I think, I don't know though. I mean, Trump is bold and he's done bold things so far, and maybe he'll do a bold thing like a gold reset. I mean, the problem is, the gold's carried in the $40 an ounce range, today. And if they reset it to today's market, it'd add like $1.5 billion or $1.5 trillion to the TGA. That's just not that much. I mean, to really make it work, they'd have to go to 10 or 20,000 an ounce or higher. And whether they're going to do that or not, who the hell knows? I mean, obviously, if they do, those of us who've invested in the metal, invested in the mining companies, we're going to be, silly rich. Of course, they probably put in a huge tax rate on that kind of stuff. But anyway, it's a different matter. But the gold reset thesis is interesting because if you read the tea leaves around the discussions that have been had, there's no doubt that they're considering and thinking about going in that direction. Whether or not they will pull the trigger, I don't know. I think we will ultimately get to some kind of a reset like that. But I think that's more likely to come after a period of very, very high inflation where everyone is screaming about the inflation, and then they can justify it. Then they can say, yeah, you're right. This inflation really is a problem, and here's how we're going to solve it. We're going to do a reset, right? And to me, that's the most likely time frame. So that's part of why Trump wants to get rates down, run inflation hot, run the economy hot. Everyone's got a job, but inflation's cooking, and then right before he leaves office, because he's probably afraid won't be reelected, they reset it, right, to try and get things back under control. I don't know. That's just one thesis. Correct, because we got 251 million ounces of gold. So yeah. That's exactly right. $4,000 an ounce is $1 trillion into the TGA. It's really like the magic $1 trillion coin. I mean, it's mechanical. They just print the money and put it in the account.
Right.
So, but if they want to make it hold at that level, as Groman has pointed out, and as I agree with him on, they would have to say, okay, we stand ready to buy and sell an ounce of gold at $20,000. You bring in $20,000, we'll give you an ounce of gold, and in turn, you bring in an ounce of gold, we'll give you $20,000. I mean, they would have to make a market in gold, literally. And then what they would see is, did they get inflows or did they get outflows? And what that would tell them is, is 20,000 the right number, right? If it's $20,000 and everybody's giving them gold and getting the dollars, well, then they set it too high. But if it's the other way around, if everybody is saying, give me the gold, here's your $20,000, give me the gold, well, then they set it too low. Quarterly report that you referred to, you can see that there's some real serious demand coming in out of China and Asia. I mean, those people, they love gold and they've been seriously demanding. In the U.S., the ETFs have been pretty dormant. There hadn't really been much demand, and it's starting to pick up. You're seeing signs. I mean, Costco had gold bars for sale, and usually when they get them in, they sell them out pretty quickly. I mean, I think, I've had a lot more inquiries about friends. How do I buy gold and so forth? So, I would say that we're starting to see a broader interest in gold, investment managers, et cetera. So yeah, it's clearly coming, but it's not at the point where the shoeshine boy is recommending gold or gold stocks.
Lawrence Lepard's analysis paints a picture of the precious metals market standing on the verge of a major breakout, not merely due to short-term price swings, but because the underlying forces driving gold and silver are converging in a way that has historically preceded powerful bull markets. Silver is now confirming gold's earlier move, signaling a broader, more forceful advance. While temporary corrections are inevitable, Lepard sees the long-term trajectory for both metals as decisively upward, with mining stocks poised to catch up after years of underperformance, creating a significant valuation gap that even modest institutional allocations could quickly close. On the monetary and geopolitical front, Lepard views a potential gold revaluation as increasingly plausible. U.S. vulnerabilities in manufacturing, defense supply chains, and critical mineral access could push policymakers toward actively supporting a set price for gold, most likely following a period of high inflation when public pressure for systemic change becomes overwhelming. Physical demand reinforces this outlook. Strong buying continues from Asia, while Western investors are beginning to return, from retail buyers snapping up bars to professional investment managers increasing exposure. Combined, the technical strength in metals, the undervaluation of mining equities, the potential for structural monetary shifts, and rising global demand, Lepard sees the stage set for a sustained and powerful bull market in gold and silver, offering significant long-term opportunities for those who position early. Are you ready to position yourself ahead of the next major move in the markets? If you found this breakdown valuable, make sure to like the video, subscribe, and share it with other serious investors who need to hear this. We'll continue to bring you the smartest minds in the markets and the insights to stay ahead of the storm. Thanks for watching.